Hello, welcome to the Invest in Value channel. I am Victor, and today I'm going to cover Anthem. This is the big health insurance provider that you may be familiar with that competes with United Healthcare. Before I jump into a full evaluation of Anthem, let me go over the guiding principles of this channel with regard to investing in value stocks. So as an active value investor, I'm looking for a stock that is discounted. I don't want to buy it at fair value. I don't want to buy it at a premium. I'm looking for companies that are very well operated and are performing well. And I challenge myself on every stock that I hold in my position to ask the question, would I buy this stock today? And if the answer is yes, I buy, or I hold, or I buy more. If the answer is no or maybe, I sell. So Anthem is a company that I bought in Q3 of 2021. Prior to that, I'd been a United Healthcare stockholder for over 4 years. Happy that the stock continued to rise, and it got to a point where United Healthcare got a little too rich for its valuation, and I was able to switch from United to Anthem, and I think it's going well so far. So looking at Anthem's stock price over the last 5 years, it's been a really nice rise. But as mentioned, I really compared it to United Healthcare. Both of these companies, stockholders should be happy with them over the last 5 years. Over the last year, the two companies, again, were kind of neck and neck. I was a United Healthcare, stockholder for 4+ years. Again, happy camper. But as we near the end of the year and really going into 2021, Anthem just seemed like a better stock for a couple of reasons. And I'm glad I made the switch in 2021 because Anthem is outperforming United Healthcare. I think part of it is that United Healthcare, the PE is over 30, where the PE for Anthem is 21. So there's an advantage there for Anthem. They both pay about the same amount for a dividend, about 1%. United Healthcare has a market cap that's far higher than Anthem. So I think that worries me a bit. United Healthcare is worth more than $500 billion. So those two reasons, as well as the free cash flow ratio to the stock price, Anthem really won that comparison. And I'll show more details in the section where I do intrinsic value calculations. Couple other pieces on Anthem specifically. Anthem has a market cap of $124 billion. They have, again, a dividend yield of about 1%. And let's take a look at the intrinsic value of Anthem. Okay, so here's the my intrinsic value model, and I've got Anthem in this model, and I've also got United Healthcare kind of in the grayed out area, just for comparison purposes. Let me take a look at Anthem first, and then we'll compare it to United Healthcare. So Anthem, I used a 7% discount rate. Historically, they've grown their revenues by 11% over the last 5 years. They've grown free cash flows by 23%, so really nice growth. I went conservative with my long-term growth of 8% on revenues. This is an insurance company, nice, smooth, growth rates. So I used 8%, which is a nice conservative rate. Using those details, my intrinsic value, my net present value of all those cash flows is $190 billion of value for this company. The market cap's $124 billion. So it leaves some room there for appreciation. Shares outstanding are 242 million. So I calculated an intrinsic value per share of $788. The stock's trading at 520. So there is a delta between the stock price and intrinsic value. I calculate that you'd be getting a 51% discount on Anthem at the price where it's trading today. So one thing I mentioned earlier is I owned United Healthcare for 4+ years up until 2021. Great stock, great return. But I began to get worried because the valuation, and this is all current, I've taken their latest free cash flows, the growth rate that I've used for United is not growing as fast as Anthem. I think they're 2 or 3% slower in growth. So they're getting bigger, and it's harder to grow when you're that big. So their growth rate is 7%, just a tad bit under where Anthem is. Discount rates is the same. Their free cash flow to overall shares outstanding, the ratio is far different. And that's what really is the difference. If you look at the free cash flow per share, Anthem has a huge advantage. And really, when I look at the intrinsic value of United, you're actually, if you bought a share of United Healthcare, you'd be paying a 10% premium, and they pay about a 1% dividend. So that's what worried me with United, and I made the switch. I feel more comfortable that, hey, I could really justify, keeping Anthem in my portfolio. It's been rising really well. It's a good time to be holding health insurance companies, and I think I'm holding the right one. Okay, so let me review Anthem stock. Performance last year was really good. The revenue growth was 13.8%, and that's great for a health insurance provider of their size to grow that much. That was excellent. 5-year sales growth has been 11%, nice and steady growth at a really good clip. Free cash flow was excellent, $7.277 billion of free cash flow. They've grown free cash flows by 23% over the past 5 years. Really impressive. Dividend is a 1% dividend, not bad, especially when in 2022, it seems like the S&P is headed to a 10 or 20% loss for the year. They increased their dividend in 2021 by 13%, and their PE was 21.05. Guidance for 2022, their members grew by 5.6% in 2021. So that'll help them continue to grow in 2022. Their premiums, although they don't discuss it much in their guidance, premiums tend to go up year to year, and that should also help them grow top line revenues. Operating cash flow, they did guide that they'd be greater than $6.9 billion in operating cash flows, and they don't spend a whole lot in capital expenses. So I think the free cash flow rate should be where it needs to be for 2022. They have an earnings call coming up in less than 2 weeks on April 20th. And I will certainly be listening to the earnings call and studying their financials for the first quarter of 2022. My outlook on this stock is this is a steady, profitable, growing company. Great to have it in the portfolio. I have a good position on it, and I continue to buy shares on dips. And I like that they generate high cash flows. Cash is king. And in 2022, having a profitable dividend payer with free cash flows is a very good thing to stabilize my portfolio. So I think there's still some upside left in the stock, and they do pay a small dividend so that some capital is returned. So just to review how Anthem scores on my scorecard, I'm an active value investor. I'm not value investor that buys a stock and waits 10 years and hopefully it worked. That's not the investor that I am. I'm actively analyzing each company at least thoroughly once a quarter. I review it once a month and make sure that, hey, this company is still a company that I want to own. The first criteria, I want to buy it at a discount. And for Anthem, it certainly passes that test. Second, I want a company that has operated very well, and Anthem passes that test. And I have to ask myself the question, would I buy this stock today? And the answer is yes. I would buy additional shares of Anthem because I think I'm getting those shares at a discount, and this company is doing well. I think will be a good stock to own for the next 5 years. So just a quick reminder, this video is for entertainment purposes only. I'm not recommending you buy or sell any specific stock. I'd like to share my story of why I bought Anthem and the research that I did and the analysis that I did. So thank you so much for watching my video. Do me a giant favor and like my video. Consider subscribing to my channel and hit that bell to receive notifications on new video releases on my channel. Thank you again, and good luck investing in 2022.